Okay, hey, this is Tyler with Seller Accountant, and we're continuing our series on how much does it cost to tackle your accounting challenges as an e-commerce brand. And so the first segment of this series was really about what makes e-commerce accounting different, or what's required, maybe is a better way to say this, to do it correctly, so that you can know if you're comparing apples to apples when you get quotes from one option versus another. I want to talk to you about the options that I kind of see broadly, and then this video is going to be about what are the things that drive costs, what are the things that would make your accounting more expensive to either in-house or outsource versus less expensive. And so let me start with, what are your options? If we're kind of trying to get to the bottom of what an apples to apples comparison would be, you have a lot of options on how to handle your accounting. Now, as a brand new company, cheapest way to do it, baby, is do it yourself, right? So that's option one, is just to own the accounting yourself. And frankly, if you're hustling to get a business off the ground, this is probably your best bet. In fact, we've even created a couple of do-it-yourself courses on the website where you can learn how to build your own QuickBooks file from scratch and just run your own bookkeeping in only a couple hours a week. It's really simple. But at some point as a CEO, the value of your time begins to go up, and you're going to be looking for someone else to handle it for you. And the prudent CEO is very aggressive at protecting the creative energy that he or she needs to drive the business forward. And so you're looking for someone else to do accounting. A lot of times accounting gets offloaded early because a lot of entrepreneurs don't like accounting. And so if do it yourself is not the right option anymore, you could hire an employee. Upside of this is that you have complete control over this person's work. You've got a lot of access. You can strangle them if you had to, that kind of thing. The downside is that you have a body that you're fully responsible for, not only training, holding accountable, but then, if things don't go well, do you let them go? They have a lot of control over your business, but you can do an employee. A $20 million company probably needs to have a couple of employees doing bookkeeping. You can contract with a VA, whether it's a stateside or non-US, but find someone who's remote, that's kind of a contractor who will maybe has some experience with QuickBooks Online. This is a good option also for smaller sellers. Tends to be very cheap. Bad news is, you may not know this person. There's a level of can I trust this person? I ended up feeling, as I was managing VAs that were not close enough that I could meet them in person at some point, I ended up feeling a constant anxiety that I didn't know what I didn't know, especially with regards to the finances. But that's another option. You can do it yourself, hire an employee, you can contract with a VA. You can outsource to your tax accountant. So whoever's doing your accounting for the purposes of for annual tax filing, your CPA firm. Also, a lot of times those CPA firms will just have a bookkeeping service they'll throw in there. Now, the plus side of this is that you might get a deal, right? Hey, I'm paying to do my taxes here each year. My CPA firm for $150 a month or for $300 a month or something like that. They'll just do my bookkeeping. This is awesome. But the downside is that most of the CPA firms that we work with are really good at filing taxes for small business owners, mitigating taxes, planning for taxes. Most of them are really bad at e-commerce bookkeeping because of the things I described in the first video, right? The complexity related to sales and cost of goods sold and inventory. And so, again, could be the right fit, might not be. And then a final option is just to outsource to a specialty e-commerce accounting firm, right? That'd be like Seller Accountant. Clearly I have a small bias on this, but honestly, we're not right for everybody. If you hire a specialty firm that really understands in deep how to do this accounting correctly, you might pay a little bit more, but the flip side is that your peace of mind will hopefully be much higher. Your level of stress related to your accounting will be much lower. And so let's pivot now to talk about what are the factors that drive costs. So when I'm literally kind of open kimono here, when I am building a quote for a seller that is considering bringing us on as the outsourced partners, here are a pretty good list of things that I'm looking at. What are the number of transactions that are literally flowing through a PayPal, credit cards, checking accounts, savings accounts, money markets, OFX accounts, that kind of thing? What are the actual number of accounts that have to be, transactions that are dealt with each month? Second one is number of accounts. Do we have one checking account and one credit card, or do we have 25 credit cards, and do we have all sorts of checking accounts, like that kind of thing? The third thing would be sales channels. Is it just an Amazon business, or is it Amazon plus Shopify, or is it Amazon plus Shopify plus Walmart plus Wayfair plus eBay? And so then you start looking at international complexity. Are you just doing Amazon.com in the US, or do you also have Canada, Mexico, the EU, Japan, India, so on and so forth, right? And so these are the kind of things that really drive the complexity of the accounting. How complex are the loans? Like, do we have just one maybe SBA loan that we're servicing, or is there a bunch of loans that need to be manually reconciled each month? Another one is talking about inventory complexity. Is this a business that just has 3 or 4 or 5 different SKUs? Or is this a business that has 5,000 SKUs in the catalog with numerous parent-child ASIN relationships with kitting and whatnot? The level of complexity in your supply chain, not just the actual SKUs themselves, but actually a number of vendors and vendor terms. Are you paying a lot of deposits? Do those terms change? Was it 10% this month, but next month is going to be 20% as a deposit? Those kinds of things really make it to where the accounting can either be more challenging or more easy to do it. Next thing we just kind of talk about that AP thing a little bit further. How often are you paying bills? How consistent are the bills coming out of the same accounts? And then a couple more things I'll mention just in terms of drivers of costs, or how easy is it to get to the data? For instance, there's a couple of the Walmart APIs that are really easy to get to, and there's a couple of them where it is really difficult to understand your sales data through Walmart. They are not even close to where Amazon or even frankly eBay is at this point in that data set. So, those are kind of the hard, this is just your business. Your business either has 5 SKUs or it has 50 or it has 5,000. That just is the business. And then there's some soft things. Like, I'll be honest with you, I'm interviewing a client during the onboarding process to see how easy is this client going to be for us to communicate with if we need to get some information, because the biggest time waster, the time that I have to charge you for that I wish I didn't, is the wasted time. If we can delete dependencies where my team can get a hold of the data they need in a timely manner so they can just do the work, it's amazing how much time is lost just in waiting sometimes to get things moved back and forth. And so ease of communication, responsiveness are really important to us. And then, again, I want to kind of go back to this, the thing that's going to drive costs sometimes is just going to be the expertise of the partner. So I would argue that having a high expertise partner like seller accountant, while it might cost a little bit more, the value, not just the peace of mind intrinsic value, but the defendable market value, if you were to sell your business, is much higher. And so our goal is not to be the cheapest provider on the market. Our goal is to be extremely effective and efficient, because we're only doing one kind of accounting. So we can always beat the price of hiring a full-time employee to do the work for you, and probably by a long shot, and we're going to be much more effective and therefore deliver value. So that's kind of our philosophy, is how can we, be the experts that solve these problems. But basically, those are the drivers that kind of impact how much we end up charging our clients for accounting services. Now, I want to talk next week about what are some additional things that make someone either an ideal or not ideal client for seller accountant or for any other kind of high-end outsourced firm. And then I want to talk you through the 2 different kinds of cost that you should really look at understanding from a pricing standpoint. Have a great day.